What's going on, guys? Live trading day here. Last trading day of 2023. I thought I'd just make a video to cap off what a great year the portfolio has and the market as a whole. So just want to go over a couple buys I'll be doing today. When the year started, I was only at $111,000. And throughout the year, there's been ups and downs. But overall, the market has went up. And you can see this in my 3-year graph too, right? 3 years ago, I was just at $65,000. So today, I'm just under $170,000. A little bit of a down day today, but that's okay because there's going to be days when the market goes down. There's going to be days when the market goes up. But in the long run, the market always goes up throughout history. Just have to buy great companies, control your emotions, buy those high quality companies, hold them, don't try to time the market, and just keep on going with this grind. So I try to dump a couple $100 into the stock market every single week. My Patreons, they get all my weekly trades, but today, to celebrate such a good year, let's go over the stocks I'm buying today, and I'll also go over the rationale on why I'm buying these stocks, and you can see me execute these trades in real time. Alrighty, so here's my portfolio. The first stock I'm going to be buying is Starbucks. So I just made a video about Starbucks, and this is a company that's not down because of the company fundamentals, but some issues that they've been having with some of their stores that have unionized. And the union, which is totally independent of the company, they've been making some controversial comments on Twitter. So that's all short-term news to me. Starbucks is not just a dividend company, but a growth machine, opening up hundreds of stores around the world. They have 31 million plus loyalty members, share buybacks on the horizon, plus double-digit raises in dividends over the last 5 years. All that is telling me is that Starbucks is the antithesis of the Detroit Pistons. It's a winning strategy, a winning trade below its 200-day moving average. This one is a no-brainer. Watch me easily add $100 into this position. So $100, just click review, just making sure that everything looks good here, and then we are gonna buy Starbucks. And then just like that, I now own one extra share of Starbucks and some change, and I'm going to be holding on to this for the long run. All right, so the next place I'm deploying my money is not a stock, but a basket of stocks. That's why I'm going to be buying this ETF, the Vanguard Healthcare Index Fund, VHT. So this one just tracks 424 different healthcare sector companies, whether that's pharmaceuticals, supplies, equipment, distribution centers, biotech. I don't need to try and guess which ones will do well. It's really hard to predict success with this sector, with patents expiring, new drugs constantly being developed. I'd rather just buy an index fund like VHT, and that way I don't need to do my own research. It just saves so much time, and time is money. I have no doubt that healthcare will be needed in the future, and we're just going to continue to bring in value for the next decade with healthcare. We got companies that are starting to edit genes, which you already know that humans will use in the worst possible way as we start to build babies in labs. But I digress. Anyway, VHT is up nearly 60% in the last 5 years. I plant these seeds today. Who knows how much money they will make me over the years. And while we wait, we also get those quarterly dividend payments. All right, so let's go and buy more shares of this ETF. So I'm going to put in another $100 to buy fractional shares of VHT. So I'm getting 0.40 shares. Looks good to me. Let's execute this trade. And just like that, I've added more to my position of VHT. That's $100 more of the Vanguard Healthcare ETF that I now own. I get exposure to the best healthcare stocks out there. All right, this next company I'm actually going to be buying in my Roth as I try to save this for the big high-yielding ETFs or stocks. It saves me from paying more of my hard-earned money to Uncle Sam to spend on something stupid like themselves. So BDCs, business development companies, they're one of the most underrated sectors in the dividend investing community. The big banks often ignore the medium-sized companies. That's where companies like Ares Capital come to the rescue. They have nearly 500 companies under their portfolio who they offer financing to, as well as sometimes taking an equity stake in them as well. So they're making money from debt instruments, they're making money from equity investments, transaction fees, management fees, dividend income. Essentially, the company gets paid dividends when the companies that it owns pays them dividends. This is how you get exposure to private companies that pay dividends. And best of all, they return that to us shareholders. So it's like dividends within dividends, right? Dividend inception going on here. So ARK currently has a 9.5% starting yield and has consistently been paying dividends for almost 2 decades. All right, so let's buy more shares of ARK Ares Capital. I'm going to put $100 into this investment. I'm going to get almost 5 shares back. Each of those should pay me juicy dividends for years to come. All right, so the trade went through. I now own $100 more worth of ARK Ares Capital, a fantastic business development company. Guys, it's that easy to build wealth in the stock market. I just consistently throw money into the markets while poor people, they're buying liabilities, they're getting into more debt. I love using my paycheck to buy more money-producing assets that increase my paycheck over time. One day, I won't have to rely on my 9-to-5 job and I can retire very comfortably. In a couple hours, the S&P 500 will close off in another amazing year, going up 25% for the year. And the amazing thing about compound interest is that it builds off all the hard work you've previously done. So if we have another amazing year next year, who's to say we won't, with the Fed likely cutting interest rates and inflation getting back under control? Another 25% gain will have me at $211,000. Absolutely insane. Compound interest works miracles. It's taking into account all the hard work I've previously done. It's so amazing. I document this journey for you guys, so make sure you're subscribed. Like the video for the algorithm, help out a small-time YouTuber. My trades are always posted weekly on the Patreon in the link below, as well as my full $100 and almost $70,000 portfolio with all the juicy details. That's all in the Patreon link below. Any comments or questions, just leave them down in the comments. And my videos, they're always found in podcast form under the Collect Cash podcast name. And I'll catch you on the next one.